Welcome. In this video, can Onyxcoin 20x increase come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When viewed from a broader perspective, it is clearly evident that the structure formed by the long-term price movements on the chart is continuing within a very healthy and steady upward trend. Such long-term upward trend structures provide confidence for investors and strengthen positive expectations for the future. In technical analysis, these extended trend lines are also taken seriously by major market participants and are central to strategic planning. This is because long-term upward trends not only represent periodic price increases, but also reflect the underlying strength, confidence, and continuity of market dynamics. In the chart under examination, it can be observed that the price movement is aligned within a defined ascending channel, and although occasional corrections occur, the overall direction remains upward. The trend line has been tested numerous times in the past, with price bouncing strongly each time, indicating renewed buying pressure. This clearly shows that the upward trend line is not just a visual reference anymore, but a strong technical support level ingrained in investor psychology. Long-term trend lines guide the progression of price like a path. Just like a riverbed, the price flows around this line. In the current scenario, the price appears to be moving in harmony with this rising trend line, occasionally touching it and then accelerating upward again. These touches are important for confirming support levels from a technical standpoint, and also present buying opportunities for investors. Especially when the price approaches this rising trend line, buyers tend to step in, often treating this area as a bottom zone and triggering strong buying movements. The current technical structure supports this healthy scenario. As seen in the past, when the price is positioned close to the trend line, it captures investor interest, and the ensuing buying movements generally continue strongly upward. This not only ends short-term corrections, but also helps maintain the main trend. A similar move could be on the horizon now. If the price approaches or touches this long-term rising trend once again, the likelihood of a strong rebound and testing of new highs is quite high. Respect for trend lines and technical analysis is crucial for understanding market behavior. Investors know that as long as an upward trend remains intact, the direction is unlikely to change, and they position themselves accordingly. The current rising trend serves not only as a technical indicator, but also as a psychological anchor. As long as this trend is preserved, investor confidence remains intact, panic selling decreases, and a positive atmosphere prevails in the market. Additionally, this rising trend line is not only a structure that supports price movements over the long term, but also a concrete indication that the low points are gradually rising. This shows that the market is finding support at higher levels with each dip, and that sellers are gradually losing strength. In other words, this is not just a chart line, but a clear reflection of the balance of power in the market, the supply-demand relationship, and investor behavior. Another important detail is that this trend is working in harmony with momentum. Momentum indicators are also producing positive signals that support this upward trend, indicating that the overall market structure is in a healthy uptrend. When volume data is analyzed, the increase in volume during upswings and its decrease during pullbacks further confirms that this trend is organic and based on solid foundations. But we cannot base our analysis solely on trends. Let's take a look at other metrics as well. Stay tuned. When the chart is analyzed, a striking and technically promising structure emerges. Especially when looking back at past price movements, a very similar scenario can be observed. At that time, the price was struggling with a specific descending trend line, and after breaking through it with strong volume, and successfully completing the subsequent retest phase, it initiated a highly impressive rally. This move created major profit opportunities not only for short-term traders, but also for long-term trend-following investors. And now, upon careful examination, it can be said that a nearly identical version of that past scenario is unfolding once again. These types of technical structures are extremely important for understanding the nature of price movements. The market always moves according to a certain logic, and the recurring behavior of investor psychology leads to the reformation of similar patterns on the charts. The current setup serves as strong evidence of this thesis. Just as the descending trend line was broken to the upside in the past, followed by a pullback, retest, and then a strong upward movement, similar phases are now repeating, with strong technical signals suggesting that the rally may be very close. Trendline breakouts are significant turning points in technical analysis, particularly when a long-standing descending trend line is broken to the upside. It often reflects position shifts among large market players. This is because major investors tend to reallocate their positions at the time of breakouts, which can significantly influence price direction. In the current structure, such a major breakout has occurred. Moreover, this breakout is not just a temporary spike, but can be interpreted as a clear trend reversal, backed by strong volume. At present, the price has pulled back toward the broken trend line. This phase is referred to in technical analysis literature as a retest. And a successful retest indicates that the price now considers the broken level as a new support zone. This is commonly described in the market as previous resistance has become support, and it is frequently seen before strong upward movements. The retest phase also provides an opportunity for impatient investors to exit, profit-taking to occur, and new buyers to enter the market. For this reason, structures referred to as healthy breakouts in technical analysis almost always include a retest. If a breakout is confirmed by a successful retest, the following upward movement tends to be much more sustainable and stable. Knowing that the previous breakout retest rally sequence ended successfully, the current technical setup provides a great deal of confidence to investors. This is because the market tends to react similarly under similar conditions, especially when the price surpasses a psychological resistance level, and this move is supported by technical indicators such as volume. The foundation of a new trend is established. In the current scenario as well, it is observed that the price has broken through the trend line, retested it, and reinforced its upward potential, much like before. This suggests that the price may now target higher highs and that investors could expand their positions in a more optimistic environment. If the retest phase is completed successfully, the price will have solid support behind it and gain a firm base for upward movements. In technical analysis, these types of structures are generally considered the beginning of uptrends. This is because, after breaking a resistance level, when the price pulls back and tests the same level again, it reflects the market's confidence in that zone. A careful analysis of the chart reveals a very promising and strong technical signal for traders. The price is currently positioned above the 200-day exponential moving average. In technical analysis, the 200 EMA acts as a kind of compass, especially for long-term traders, because this average line is one of the most reliable reference points for analyzing the long-term orientation of the market. A price break above this level can be interpreted not only as a short-term rebound, but also as a deep structural transformation that signals a trend reversal. Since the 200 EMA line reflects the average of the general movement of prices over time, when the price is below this level, it is assumed that the bears are dominating the market, meaning that the downtrend continues. But when the price breaks above this line, the picture changes completely. This kind of rise indicates that the bulls are back on the scene and starting to lead the market. Moreover, since this level is considered a psychological boundary by most traders, a break above this line usually generates strong buy signals. This technical reality is exactly what is happening right now. This is why EMAs matter. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.